Andrew Holland, CEO at Ambit Investment Advisors, joins us on the show right now. Andrew, hi. How are you feeling about the market right now? Does it seem like what we've seen in the last few days could culminate into a fresh bull market for the markets?
Yeah, I think between now and when the state elections start, I can actually see markets moving higher. I think this week we'll probably see the ECB reduce interest rates in Europe, to help growth there. So I still think liquidity conditions remain supportive of markets moving higher. But I think it's a short window we have now for this rally to move further ahead. But obviously Modi fever might take us to scale new highs again.
Andrew, what have you made of the strong guidance Cognizant has set out, and does it, or rather, how does it augur for the domestic IT space?
Yeah, I think IT is the only defensive sector we want to be investing our money in at the moment, because we are still seeing growth, and my expectation is that the rupee will probably weaken from here as the dollar gets stronger again, and as we come towards the end of November, when all the the RBI measures start to unwind. So I think the growth prospects for IT companies remain very favourable. Unfortunately, I can't say the same for the pharma and consumer sector. I mean, the PE multiples in the consumer sector are just too high, and there's no room for error. And on pharma, there's a regulatory overhang, I think, on the whole sector, which worries me. So IT is the preferred sector in this, the defensive side of it, and we would continue to keep with our favourites like Tech Mahindra.
Andrew, for summer 2069, this market has given a double-digit return. Nifty was up by more than 10%. What kind of upside one should expect from this Samvatir?
We think sometime in 2014, and whether this is at the highs or the lows of the market is very difficult to predict. But we will enter a new bull market for India, and that's based on GDP growth, moving to 5.5% and then to 7% thereafter. But the operational gearing for India is very high. So if you get manufacturing capacity, say, moving from 60 to 65%. Then that all falls through to the bottom line. So expect GDP growth to surprise us on the upside going forward, and then you're going to get the earnings growth coming through very strongly. So operational gearing first, and then obviously, hopefully, as interest rates start to moderate next year, then you get the financial gearing aspect as well. So it feels to me that we're very much, where we were, say, 2002, 2003, the government spending money on projects, which is, difficult to go and touch and feel, but we know expenditure's happening, and that will have a kicker on the economy, for India, going into the second half of next year, and that's why we're getting from, the 4.5% GDP growth this year to 5.5% and then 7%. So it feels very much like we're in that phase, and although, we might not see funding till after the elections for some of these projects, they definitely will, be commenced, and that's the key to our kind of call on a bull market in 2014.
Andrew, do you like anything out of the cap goods or infrastructure space? BHEL is slated to come out with its earnings today, and that has been, somewhat in focus.
Yeah, what we've done is we've been very selective this year in terms of being more defensive and renting the kind of more cyclical sectors. We now switched that call to wanting to own some of these sectors like industrial. So L&T and BHEL will all fall into that. I think I'll wait to see what the BHEL results are like, before dipping our toes into that stock. But certainly L&T is a favourite for us. Autos remains, one of the sectors, our preferred sectors, along with materials as well. So those are the type of sectors we believe will be the first to show some very strong rallies going into 2014.
What about steel names like Tata Steel? Because metals in bits and starts have been rallying somewhat. You've got ArcelorMittal's earnings as well coming out today. And for names like Tata Steel, it's going to be extremely crucial because that will somewhat throw light on how Tata Steel's European business would actually pan out.
Yeah, as I said, materials is part of our preferred sector, so steel and aluminium and also Hindustan Zinc would fall into the categories or companies which we've identified and will start buying now. As I said, the sectors that we want to own. I'm not yet convinced that we need to be owning the banking sector or the PSU bank, so we'll continue to rent those in any market rallies. But for the moment, we're going to concentrate on the 4 sectors I've mentioned. We feel that these will be the early movers. So even though you've had reasonable rallies in the metal sector, I think this is just the start of a long-term price movement for them to the upside.
Andrew, for the moment, there is a bit of euphoria and a lot of momentum in mid and small cap stocks. But do you think mid-cap investors are not going to make a lot of money because this market is largely dominated by institutional investors or FI investors, and FI investors rarely go down the ladder?
No, I don't think that's kind of correct, Nikunj. I think what will happen is, we will have a market correction between now and March of next year, that's for sure, and that will be global in nature, and this will bring down the mid-cap stocks again. But what I would say is, like any new recovery in the economy and new bull market, we'll obviously see new companies and new sectors, start to emerge, and those are the mid-cap stocks that you want. So, for my example, I keep giving Tata Global Beverage, partly because I like Starbucks, but that's the type of company which we believe will become a major company in the future. So mid-caps will perform, and FIIs at some point will look down because you'll see new emerging stars coming from this sector. It's not yet, Nikunj, that's for sure, but sometime during 2014 onwards, that will be the time to place your bets on some very well managed mid-cap companies.
Are you concerned at all about the way the rupee has been panning out in the last 2-3 trading sessions, because it's somewhat beginning to weaken again?
Yeah, listen, I think with the rupee we've had a great run. I mean, everything's fallen into place in terms of no tapering, a weak dollar, the problems with the fiscal deficit in the US and the budget deficit, all of that's played into emerging market currencies' favour. And now really I think when the 10-year bond yield's at 2.66%, then you're going to start to see the dollar starting to harden again, which is what we're seeing. So I think by the end of November, once the RBI measures come to an end, I could see the rupee nearer to 63 than 61 it is today. So don't forget that there could be a lot more turmoil in global markets ahead of the change in the Fed, ahead of the debt ceiling again in January, February, and there's big changes going on at the Fed. It's not just Yellen that's being taken over as chairwoman, but you're also going to see 4 or 5 new members of the Fed come in, and whether they're hawkish or dovish, we're going to have to wait and see.
Even though ITC currently enjoys the status of being a safe haven stock, it's been a market performer, up 10% in last 1 year and down more than 25% from the recent high. Do you think ITC has lost its appeal?
Listen, I think with ITC, a lot of its other businesses apart from tobacco continue to perform very poorly. And until you see some real turnaround there, I don't think you're going to get the extra kicker to valuations. I think and the PEs that the consumer sector is at the moment, it really is leaving no room for any worry, and therefore, for my view, I just can't be I can't be buying these stocks anymore, even for defensive purposes. It might help you in 1 month when markets fall sharply, but you're really not going to get the performance from there, which is why we've switched from defensives to cyclicals now, and the 4 sectors I mentioned. So I think the consumer story is yesterday's story in terms of price appreciation for stocks.
What about names like Jubilant Foodworks, though? Them being in the fray for a franchisee of Burger King, would that be a chip on the shoulder?
Yeah, I mean, you're going to get, as I said, new emerging companies coming out from different sectors. Our favoured one is Tata Global Services in terms of, you know, this category in terms of consumer sector. We also like United Spirits, but we do feel that there's going to be, you know, a lot of reorganisation there first. So I'd like to see what that is. And what Diageo are going to do, but you know, that's a great long-term story, you know, which I'd probably want to buy into, you know, say 10% cheaper from where we are today. But Jubilant Foodworks is, you know, has had a great run, and it's obviously doing very well. But it's not a sector I really want to you know, to be in, because again, it's a very competitive sector. There'll be more companies coming into this sector. And I'd rather stick with something which, you know, I can see a lot more growth in terms of, you know, earnings, and Tata Global Beverages, you know, fits into that category for me.
So Andrew, what is in store for winners of last Diwali? HCL Tech, Sun Pharma, TCS. Are they in for another cracker year of performance? So now it's time to take some chips off the table. Yes, these are good quality franchises, but they don't offer that degree of valuation comfort.
As I said, you know, I think the IT sector is, you know, still is a preferred sector within the defensives. I still like Tech Mahindra more than I like the you know, the large IT stocks. And with pharma, you know, I just worry about the regulatory, you know, outlook. I mean, we've seen Wockhardt and Ranbaxy suffer from that. I'm not sure what's going on, but it's something which I don't quite understand, and therefore I feel the valuations in this sector as well, you know, have no room for really any error or any kind of regulatory oversight. So I'd rather kind of keep away from these, you know, the pharma and the consumer sector, keep with IT, but start buying cyclicals. I think that's, you know, the call now is not really the sectors which have done well, it's the sectors which will do well, and you know, that's where we're focusing our attention now.
Okay, Andrew, good chatting with you. Appreciate you taking the time out and speaking with us.